Hey there. Pleasure to have you on today. Thank you so much for joining.
Likewise, Paula. It's great to be here. Thanks for the invite.
You too. Awesome. So I'm Paula Pettit. I'm the VP of Strategy and Growth here at Range. We do stablecoin intelligence, risk, and monitoring, which is why we have our friends over at Quantoz on with us today to discuss their stablecoin. I'd love if you could give a quick or an introduction of yourself. It doesn't even have to be super quick, but tell the audience, a little bit about yourself and what you guys are doing.
Sure. So I'm Arnoud. I'm the CEO at Quantoz Payments. We're a financial institution. We're regulated by the Dutch Central Bank, based in the Netherlands. We've got about 30 people in our team, most of them based in the Netherlands, but we've got some colleagues in Germany, in the UK, and Asia, which are key markets for us. Right? So before Quantoz, I spent quite a bit of time, probably about 10 years, in blockchain, primarily in banking, but especially focused on commodity supply chains, figuring out how we can digitally move soybeans and iron ore and oil and gas to their destination. That's we could make that work, but one of the challenges was always if you make the transaction go really fast on the physical side, then the money starts lagging in the bank. So what's the point of doing that, right? So that people are still waiting for the money, which create an interest in stablecoins, which were emerging. And with Quantoz, I've really found a great company that I can work with and take a joint vision to market. So Quantoz is basically, I would say it's a tech company first, then a financial institution, and then a stablecoin issuer in that sequence.
Nice.
We see a lot of parties being stablecoin issuers, but I think we've taken a different path to get it there.
Okay, great. So you mentioned that it was kind of from the banking lag. So kind of joining the stablecoin movement came from this actual need and this feeling of kind of the slowness of the institutional banking kind of setup.
Yeah, I think it's the correspondent banking network is the way everything has been designed, and this is I don't think it's anybody's fault, but it was just a different time and age where moving information was expensive, so batch settlement, reconciliations taking place, probably things still sent by telex. I think that's in the origins, right? So I think nowadays the expectations of commerce are quite different. We see consumers being used to real-time settlement, merchants on platforms want to get their money straight away before they ship, and we see that more and more that expectation moving into corporates. And then parties get disappointed because it doesn't work that way for the larger amounts and B2B transactions, particularly going cross-border. So we've been really working hard on providing a complete settlement solution. Really focus on corporate treasurers, but also platforms that operate cross-border. And increasingly AI agents, because the stuff that we're looking at it doesn't really matter whether you do a transaction of 1,000 of a cent or $100 million. It's similar pain points that we can see, and of course you've got the current system isn't really priced for micropayments. I mean, this is one of the areas that we look at, right? So we do think that many forms of money are needed in this segment. So I don't think stablecoins are going to rule everything and replace everything. It's a symbiosis between different forms of money that we'd like to employ.
Yeah, and I guess with your stablecoin specifically, you mentioned micropayments. Is that one of the main use cases you see for it, or what is kind of the top priorities that you guys are trying to address with your stablecoin?
I think micropayments are out there; they'll be coming, but I don't think it's yet the biggest one. Funnily enough, the company started its origins in micropayments, looking at how to facilitate payments, machine-to-machine payments, and it doesn't really work even with SEPA. So if you do a transaction of 1,000 of a cent and you have to pay 12 cents to process the transaction, it breaks. Right? So the company started looking at that, and the challenge was not so much the technology, but how do you get it accepted and regulated as money? Just because a token, you call it a euro, doesn't mean it's a euro, right? So this is really where the company started looking at, well, how how do we get around that? And the solution was really to call it e-money, which has a long history already, but
Uh-huh.
then convince the regulator you can use a public blockchain to administer the balances rather than an internal ledger. And I think that was one of the challenges, but in the end succeeded. So that is coming back now. It's very interesting to see the AI, agentic AI commerce coming up. A little bit scary, of course. Lots of agents running around having wallets,
Just doing whatever.
but it's perfectly suited for what we built originally. To be honest, though, where we see the traction coming in and where we see our customers struggling is really on the cost of liquidity and the cost of rails. If you want to do real-time settlement in a manner that is in real time and has a strong certainty of arriving at the target time, you can't use the current system. You need to use liquidity buffers. You need to use other rails. And this is the bit that we're looking at. And this is for B2B payments, particularly.
Okay, B2B payments. So are you guys primarily targeting, I guess, the B2B payments, or do you see cross-border payments as kind of equally as important? Or is there a focus between the two?
It's particularly cross-border. And in this case, border is, I would say, it's more cross real-time settlement network. In Europe, you've got SEPA, you got Fed now in the US, you got faster payments in the UK. They're all really fast and great for payments within that network. It's hard to improve on them. But as soon as you if you need to make payment from one to another, you need to go via the corresponding banking network. So this is the bit where we're really focused on helping corporates avoid cut-off times, be able to do 24/7, 365 payments across networks, and let's call them cross-border to make it easier, and quite often cross-currency. The EU looks like a homogeneous block of countries, one big area, but we've got euros, and then we've got Swedish kroner, Danish kroner, Norwegian kroner, Polish zloty, Hungarian forint. So we've still got a lot of currencies under the same regulatory umbrella, with operating on a different system. And so this is where one of the opportunities is, as well as the classic cross-border settlements between Europe, let's say, and Asia, big supply chain settlements, but also commodity trade flows between Africa, Latam, and European customers.
And I think for those kind of cross borders between that, you mentioned you have an Asian counterpart or counterparty in Asia that works for you guys. You mentioned Africa. For those cross-border payments, do you see them engaging with your stable coin and off-ramping in with that one in their local jurisdiction, or do you see it converting into a local version of their stablecoin? How are you guys looking at that?
I think outside of Europe, USDT is a pretty dominant settlement token. So for me, it wouldn't make sense investing in liquidity of let's say a USDQ, which is, for instance, our US dollar token, and a Colombian peso book. It doesn't make sense. So what is important, though, is that we work with parties, exchanges, OTC desks, typically outside of Europe, that have access to USDT and can actually do the almost like an on-ramp to USDT and then do the off-ramp into a local currency. I think that's the smarter way to do it.
Yeah, no, I do agree. And then, you mentioned e-money and, we talked about stablecoins. Where does, where does what you guys offer fall on that? And what are your opinions between kind of both of those, between kind of issuing e-money or issuing a stablecoin?
It's an interesting one, right? And I think the EU, by calling stablecoins e-money tokens, sort of gave a hint at what they were thinking of, because it's almost like tokenized e-money. Not quite, but it's getting there. So for us, e-money is a very important part of our solution set. So if you think about money from a user perspective, it's basically it's a balance on a ledger. and that for a particular account that has your name on it. Now, at a bank, it's fiat money. You're in the core banking system. You've got an account, has your name on it. There's a balance. E-money is something similar. It's has your name on an account, has your name on it. We call it a virtual account. Has a balance, but it's on our internal ledger, not the bank's. So,
Yes.
which means that on our ledger we are a lot freer. We can do stuff 24/7, 365, and we can flip a balance from one account to another, which is a payment, and we can do it instantly and very quickly and free. But we can also choose. Our customers, our users, can also opt to use a stablecoin. In which case, they mint a stablecoin, and then suddenly the admin, the ledger, is balanced on a public blockchain. We support six, so you can choose which one you want to do. But the concept remains the same. It's just suddenly you've got this public administration of balances, and the money can move to accounts that are not recorded in our system. That's the novelty of stablecoin. So we see e-money living on our ledger as a fantastic tool for intercompany settlements, for supply chains where you've got customers and suppliers that you're often transacting with. You want to have them on the same system, so you remove any settlement latency and settlement risk out of your commercial network. But then, if you need to pay somebody outside of that ecosystem, you flip it to a stablecoin and you make a payment. Could be global workforce, could be to a supplier that's not on the network, could be to a market, right? So it's different forms of money have different purposes. And one of the learnings that we had early on is that, particularly now as the industry is, I would say, not even in teenage years yet. If you go to a CFO, many of them are very interested in stablecoins. You go, say, hey, we've got a stablecoin for you. He said, oh, cool. I'd love to use one. Now what I do? Well, do you have a crypto account somewhere? There's an exchange. No, we don't do that. Do you have a wallet? Well, what kind of wallet? So everybody needs to cobble the solution together. And it's a pain. So the user experience is nowhere near ready for big corporate adoption in terms of normal companies. I've seen some companies like in the payment space, they've adopted it because it's the friction in their process is so high that it makes sense to do that. But general adoption, I think, will lag a bit. So, but we see e-money as something that is like a step up. Why don't you first start using digital money, remove some of the constraints, and then start experimenting with stablecoins? I think that's a more natural evolution.
And right now, if clients were to use them, would they see the difference of it moving between kind of the e-money format and the stablecoin format? I think the goal is eventually it's just money to everyone. But kind of the way, these institutions are engaging with it now, they'd have to see kind of it switching between, right?
Yeah, so I think most of the stuff that we'll be doing is API based, so it's usually pretty hard to demo. But as you can imagine, you would have a dashboard, which we have as well. You've got an account balance in euros. You go on US dollars. That's e-money.
Yeah. Okay.
And then you say, hey, I want to mint 20 USD stablecoins, USDQ. So we deduct 20 from the e-money and put 20 US dollars in a wallet. So simple as that. And then you see
so it's happening.
Yeah. And then you can move it. Right? So the stablecoins e-money is not that useful for some of the things that we see. We see a lot of interest for tokenized yield, particularly if you can have tokenized money market funds that can make cash buffers productive. And it's very difficult to do that without a stablecoin. So we see that a stablecoin is a natural format for that, to access that type of capability.
Okay. No, very interesting. Yeah, we'll see how that evolves too over time. Pulling it back to something you said earlier about kind of the AI agents, I think that's something a lot of people are thinking about and talking about, and it's interesting. How do you kind of approach the rise of them, but safeguarding having enough safeguards both on the compliance side and the operational side? Because of course, these agents can just go?
Yeah, so there's a couple of companies that we work with and are doing experiments with that. What we find is, interesting enough, if you come from let's say an e-money background, if that was the starting point before you do stablecoins, you can go anywhere. You're used to creating closed loop networks for payments, and closed loop really in this case means that you have identified the owner of the wallet, and a wallet that hasn't been identified, you can't send the money to it. Programmatically, it's impossible to do that. So what we see coming out in the experiments with AI agents using our money is that the use cases tend to prioritize almost using our closed loop capabilities and wallet attestations to create a trusted network of services that agents can purchase. And you can program the agents to only buy services from those identified and KYC providers. So that's one aspect. So I think closed loop is actually quite a good setup for that one in the early days. And then of course they all need money, the agents, so it needs to come from somewhere. And then it's important to be able to have the throttle on. And this is where let's say the speed of payments with blockchain becomes really important, because you also don't want to let's say if pre-fund, you need to pre-fund those wallets. If you're running 20,000 agents and each of them gets a wallet of $50, that's I need to do the math, but it's probably around $1 million, right, sitting out there on exposure that you need to pre-fund, and they start spending it. That is a lot of liquidity that you need to fund that's doing nothing, waiting for the agent to fund it. So if you can, let's say, pre-fund with $1 every time, because your rails are fast and cheap enough to do that, then you don't have to fund that liquidity, and the agents can't go completely crazy with all the money.
Yes.
So there's
okay.
So you see symbiosis, and of course a lot of transactions will be sub 1 cent, and then using blockchains that are designed for that. I think Ethereum is past that point now, that a transaction is sub 1 cent, but we've worked for a long time with Algorand, Stellar, XRP. They also have pretty low-cost ledgers. Aptos is emerging. So you see these low-cost ledgers emerging, and some of them are even free because the gas fees are no longer part of the business model of those blockchains.
Okay. Yeah, that's very interesting. I think it's a space that people both in our industry and around and everywhere. It's I think it's just
really good
fun,
and it's coming there, but it's not something. I don't think it's commercially viable yet as a standalone offering. For us, it's something that we experiment with, and some of our users and customers do. But it's very fascinating, and you can imagine it will just take off like that, right? So once somebody gets it,
it'll just go. Yeah, I'm contemplating buying a mini Mac so I can have a little agent that does all the things. Let's see. I want to give you a moment too, because you guys recently became a Visa principal member. Want to give you a moment to speak a little bit more on that and kind of what that means for you guys. I think that's obviously, we all know Visa.
Yeah, it's a great brand, of course. And if you look at, for me, it's around adoption and being able to make this type of digital money useful in real life. So if let's say if we want to use e-money, then all the merchants would need to be on board with us and use our e-money. It doesn't scale, and it's not really where we want to go to. If it's stablecoins, it means that everybody needs to be able to accept those stablecoins, right? So without a point of sale distribution partner, but what Visa does, it unlocks that distribution completely. It takes the forms of money and can deliver it at point of sale or to the merchant in the format that they want. And I think that's a very, very powerful network to open up what we do. And it's, when I say for us, we are obviously a platform. We serve corporate, so it could mean that our corporate customers can use it for their spend management. They can create a branded Visa card for their employees or suppliers. We can, but also platforms, fintechs, etc., that want to use our financial services offering in the EU but then need a way for their users to be able to spend the money more creatively other than on the platform. This is again a way for them to expand their brand, expand their business model, and expand the offering that they can give to their users through our partnership with Visa. I think that's on the card side. It's I was actually quite surprised. There are not that many principal members and BIN sponsors around, particularly in this sector. So I think it's quite a unique position, particularly where we are from a regulatory perspective. But the other thing is that I think people are not that aware of what else Visa is doing. There's
Yeah.
the Visa network, Visa Direct. It's global payouts. It's got a market reach with payment service providers all around the world that is immense, and it's actually a parallel capability to SWIFT. Where SWIFT connects the banks, you see the Visa is connecting a lot of PSPs, which is a very powerful way to deliver money. For instance, in Colombia or another location instantly to use in the network, and so it's really symbiotic with our. There's a strong synergy with our proposition where we want to go. So if you think about, for me, it's almost like a third money layer. We've got e-money, we've got stablecoins, and now suddenly we've got Visa, or we've got virtual accounts, blockchains, and now Visa as a channel, and we'll keep adding to that, no doubt, in the future.
Yeah. Well, it's a super exciting development. And yeah, congrats on being, part of that kind of consortium there. So with them coming in, what do you feel like, and obviously all the regulations come through, visas coming in, cards are coming through. What do you feel like is still needed? I mean, A, I think from the infrastructure side, B, from I think consumer side, for these for kind of stable coins and all of this to be used as seamlessly as kind of card payments?
I think it needs to be abstracted, and I think there's a lot of work that's being done on the consumer side, but you still need to be somehow a crypto person, and luckily there's many of them nowadays, right? It's not like a novelty anymore. It's not a dirty little secret that you hide that you're doing crypto. I think it's quite out in the open, so it's not that bad. But it's especially on the consumer side. I think the user experience is improving quickly, but not on the corporate side. And that's what I just mentioned. You need an enterprise is looking at other things. So the benefits are really clear. Like if you can increase your gross margin by 25% or your working capital by huge amounts, the benefits are really clear. But it's selling it to a corporate is much more about taking away the reasons you say no, taking away career risk perception, and that's a much longer list than the benefits. So you need to start chipping away at that. And the biggest one has always been, let's say, the regulatory status. Stable coins are on blockchains. Blockchains are crypto. Crypto is dirty, therefore stable coins are dirty. So I think that's changing. But and the regulators have taken that argument away, and I think that's where a lot of the excitement comes in. The next big step would be for companies to be able to book it as cash equivalents on their balance sheet, get the auditors comfortable with that, so they don't have to mint and redeem at the end of the day just to get it back into their bank account. They can keep it there, which is a lot more efficient and cost effective. So I think that needs to happen, and then I think there needs to be more one-stop shops that you can just plug in, right? So I want to, let's say I'm a CFO, a treasury manager. I've heard about this stablecoin stuff, but I don't actually want a stablecoin. I want to be able to do real-time settlement in another jurisdiction, and I want it to be cheap, and I don't want to have whole massive buffers for that. That's what I want. So is there something that I can just plug into my operations or into my system or on my desktop and say, hey, here's this is the bank account, or this is the party it needs to go to.
Yep, fund.
So you don't really need a bank account, it's the party, and it needs to be there by 5 p.m. Can you do that? $200,000. Okay, yeah, sure. That
Hmm.
needs to be the experience, right? And I
Hmm.
think to get there is a while off, but that's emerging, and we need, let's say, a forward-looking corporates and treasurers that understand the benefits, want to learn about this, and work with us and our peers in the market, obviously, to really start creating that experience.
Hmm. No, I mean, that's always been the thing, kind of, actually solve the problem, make it as easy as possible. I mean, I think pushing the tech is good for, us within the tech industry and excitement and headlines. But at the end of the day, what pushes the thing is solving the problem and just having it
But,
easy. It's not
and, and
actually.
and quantifying it. For us, the developers are important users, so we invest in developer experience, making sure that
Hmm.
APIs are clear, that it's easy to plug it in, and we're not wasting time. So those are really important things as well.
Agreed. We always we're a developer focused company as well, and those at the end of the day the people who are going to actually integrate the things and get it to work. So worth investing in. But awesome. We only have a couple minutes left, so I just want to also give you a moment. We do have quite we've been chatting with some other euro backed assets as well, kind of come into the space. What do you feel like differentiates Quantoz kind of from the rest and in the long term as well?
I think there's I guess there's a couple of things, right? So we're in an unusual jurisdiction for a stablecoin issuer. The Dutch central bank is a highly respected regulator, but careful, it's not an easy place to get a license. So you see that many of our peers are looking for licenses in the EU and possibly some easier jurisdictions. Although that's changing because that's also a shortcut to nowhere in the end. So having obtained that license and that relation with our regulator, that gives us access to tier one banks for our reserves and for access to global payment networks. So we're not with small crypto friendly banks that have as a niche. We're with large tier one systemically important financial institutions that probably don't want to do crypto, right? So but it gives a lot of confidence to our users and corporates that we engage with in terms of the counterparty risk, because ultimately the redeemability of the settlement asset is it's a hygiene factor. Right? There's no point talking about benefits unless you can solve that one, and
Hmm.
that's a bit where I think we have a leg up. I think we're also one of the few that do many different multiple forms of money. So we
Yeah.
see orchestration not just as a which wallet, which exchange, which PSP. We see orchestration also what form of money is most appropriate for this settlement objective. And quite often it's just Swift. I just make a payment. Why bother with the other stuff? Sometimes it's e-money makes more sense, and sometimes it's stablecoin. So you need to choose, and that determines the rest. So I think we provide a level of optionality that some of our peers in the market don't have, and I think that's an important aspect. And arguably, the third one is we are a technology company. Um, we own all our tech. We own the whole stack, all the licenses, the infra, the stable coins, the money issuance. That's all within us. So we have an opportunity to compete on margin. We can go really, really low on price,
Nice.
and still make some money. We don't have to share it with 10 other parties that are sitting in between. So I think those are some things that set us apart. But first and foremost, I think we're set up to be a credible counterparty for serious companies. And serious also listed companies. We've got SOC 2 Type 2 type certification, for instance, which is a mandatory thing, ISO certification, all those tick boxes that you see on an RFP. I think we can start ticking off most of them and then start talking
Very
about the
exciting. Really builds the confidence as you're filling out the RFP. You're like, that too. Yeah, that's good. That's great. And yeah, I guess from a more holistic point of view, if we fast forwarded 18 months, what would you see as success for, I think, regulated digital money in Europe as a whole?
I would say if we can get stables clarity around when stablecoins can be booked as, or digital money as cash equivalents on the balance sheet, I think that's a
Hmm.
huge step.
Okay.
That's a big unlock, because then you start seeing reduction in off-ramping redemptions, and you'll see that the money starts living digitally and
On
moving
chain.
around. Right. So that's a really powerful step. But I think, if we can get there in 18 months, it'd be awesome. Right.
Well,
So
it's been a, I'll go for it.
no, sorry, go for it. Yeah.
Oh, I was going to say it's been a pretty, fast-paced previous 18 months. So, if they can keep up the pace in the next ones, hopefully we can get that going. But awesome. We're almost at time now, so I want to make sure if there was anything that we didn't get to cover today about any of the your outlooks or what you guys are doing at Quantoz that you want to take a couple moments to cover here as well. Happy to give that space too.
Yeah, no, I think you've given me a good opportunity to talk about what we're doing. We're working with a whole range of parties. Funnily enough, there are different types of companies. So there's a remittance company. We're working with an African bank. We're working with a commodity trader. We're working with a commodity trade finance house. We're working with a consumer app. Um, Very, very different models, right? And my biggest struggle is to explain to investors when they ask me, why can't you just focus on one thing and do that really well? I said, but we are focusing on one thing, right? We are solving one solution, which is the cost of liquidity, of real-time settlement, and removing the cost of liquidity, and removing and reducing the cost of rails. And I can't help it that many companies are coming to us to say, hey, can you solve it for us? And it's not extra work. It's the same infrastructure. So which highlights to me is that we're much more infrastructure than an application for a
Hmm.
specific user.
Yeah.
There's enough optionality built into the infrastructure that we can serve those. So that's quite a unique and a very interesting position. But it's sometimes it feels like a cookie jar, because you've just got all these nice problems you can solve, but we don't have the resources to handle everyone, right? So we do focus on the higher value ones, but it's a great
That makes
business.
sense.
Yeah.
Yeah, and it's a great problem to have at the end of the day. But no, I get that. And sometimes when I could see where it's like we can solve all of these things, some people could be skeptical, but it's like no, actually we can. These are just all the different applications of the same thing. So yeah, I'm very excited to see how kind of this goes and in all the different directions and what kind of evolution we see. Hopefully over 18 months, but at least the next 3 to 5 years, I think the banking and payments industry is going to look completely different. And hopefully, yeah, hopefully we're both at the forefront of that. But awesome. Thank you so much for taking the time today. For anybody who wants to check them out, you can check them out at Quantoz, obviously all the different applications that they're doing. And yeah, I appreciate you taking time.
Great. Thanks for having me, Paula.
Awesome. Sweet. Bye.